What is going on, everyone? Chris with Journals, Comics, and Pop Culture. Today's video is going to address some investing questions and a topic of discussion relating comic books to the stock market. Now, I know that there are many similarities when we look at comic books and when we look at the stock market. We can look at comic books simply as an investment and how comic books move on the market. We can look at comic books and create comic book indexes and all this stuff. But this video today is really looking at how it's truly a fact that still, even with all the similarities, comic books are not stocks. And there's huge differences and huge factors that we need to take into consideration, especially when we're looking at comic books as investments, looking at comic books and how they're moving on the market, and how we have to really look at comic books completely different than how we look at stocks when it comes down to the nitty gritty. So this all was inspired by a Facebook post in a comic book group and a back and forth that I had with an individual, and it was a very productive one, and I want to make that very clear. So today I'm going to narrate, though, our back and forth to let you guys see exactly all the fruits that came from this conversation. If you guys aren't subscribed to the channel, please take some time to do so. Check out all the links in the description below as well, including the link to today's sponsor, popculturezone.com, your online home to exclusive and incentive variants, CGC and CBCS slabs and keys. Definitely go check them out. They also offer pressing services as well, folks. So check out their link and stick around to the end of the video to see a 60-second clip detailing more about popculturezone.com. But let's get into this video. Let's get into this post. And big shout out to the original poster here for just coming into this group and asking this question. So let's read what this individual had to say. They said, when the economy crashed in 2008, I was in the middle of a collecting hiatus. Since the sky is falling and everyone seems to be afraid the comic market is going to crash again due to a looming recession, I'm wondering what happened to comic prices in 2008, specifically major and minor keys. For the love of all that is holy, please leave politics out of it. I love that this individual was saying, let's just try to focus on the data here, right? Economics, not politics, right? So I originally let this comment here saying the comic market has never crashed. And look at this. I get, a couple people like, okay, yeah, giving me a heart and a like. The majority of people are laughing at me. They're laughing at me, but it is what it is. I provided context, folks. So we're going to go down to the comment that I did leave right down here. And I wanted to reiterate. And this is where somebody jumped into this thread. And at first, I felt that this individual was jumping into the thread with some cynicism. You know how people are on social media. They jump in kind of with the nose in the air, and they're very defensive and snark. And I wanted to set the tone because I wanted to have a productive conversation. And believe it or not, it ended up being a very productive conversation. Let's narrate. Starting from the top. Let me reiterate for those who follow groupthink without actually knowing fact. The comic market has never crashed, not even in the 90s. The comic market consists of both the primary market and the secondary market. The primary market are books bought off the shelves distributed by a middleman from the publishers, i.e. Diamond. This market is multifaceted, consisting of floppies, variants, trades, etc. The secondary market consists of back issues or anything sold on the aftermarket, which includes eBay. Never has the entire market, quote unquote, crashed. The biggest hit the market took was in the 90s, but it was merely a portion of the market, that being recently released 90s SPEC book. While mass-produced 90s books were becoming worthless, Golden Age and Silver Age books were breaking records with fast increasing market value. And the primary market did suffer as well moving into the late 90s, but this was not a crash because a crash is only relevant to investment value. Even though the primary market sells smaller quantities of titles than their million print run peak in the early 90s, the primary market and sales revenue has continued to increase since the early 2000s. While the blue chip secondary market has seen healthy ebb and flow, even during the 2008 recession, many books still set new floors. So go ahead hit the laugh emoji and repeat what you hear from some random YouTubers or online forums, but facts are facts. So here we go. We get into it with this individual who happened to have the same name as me. And you guys will see this a little rough start here, but we got into a good discussion. This Chris jumps in and says, yeah. So considering the only definition of a crash is that an index or group of stocks dropped double-digit percentages and the drop was sudden. I'd love to understand how you don't think the comic market hasn't already crashed to some degree. Okay, I'm going to stop right there, and I do really reiterate this. This is not the only definition of crash. And this is a very black and white, like footnote, cliff note version of what crash means when looking at the stock market or investment markets. So that is very, very fallacious in a sense to state that this is the only definition. No, it's not that black and white, but let me go on. I mean, do I really need to go through the grunt work of putting together different comic indexes to prove it? Or is the fact that many YouTubers are putting out weekly videos on books declining 10 to 80% in recent months good enough evidence? So I felt this individual was coming at me extremely snark and cynical, and I'm like, no, okay, look, I'm ready to have a conversation, but I'm going to put a stop to this right now. So my reply was this. Are you here for a respectful conversation or merely here to pull out a measuring stick? If you are willing to engage in a respectful convo, then I'm all for it. First, I honestly have to ask if you got your definition of crash from a quick Google search, as that criteria you gave is missing a whole ton of context and depth. I'm not going to waste time on adding context to crash, though, as this information is available and it surely isn't as black and white as you make it seem. I say this respectfully and not to ridicule you, and I'm being honest. Like, look, this is not a way to jump in a conversation and state what this means. All the information is out there. You could Google and dive deeper into your Google search and understand how the term crash in an investment market is not so black and white whatsoever. I continue on. Let's go right into comics. First off, what you are seeing right now in terms of market-wide dips hasn't been quote-unquote sudden. Books, even blue chips, that have been seeing upwards to 20% plus dips have more likely been on a downward trend for the past 6 months plus. The books that usually see more sudden dips are throwaway SPEC books that are ballooned by reactionary FOMO and not intrinsic value. And that's a whole other conversation. Now, to the YouTubers you speak of, many of them sensationalize the issue and don't know how to read the data, or are purposefully distorting the data because it brings them clicks and views. For example, using outliers to say a book has dropped 50 to 80%. Comic book market evaluation can never be done using outliers, let alone using individual sales. Why? Because simply, they are not stocks. And this is where we get into the bulk of it, folks. Comic books, especially blue chip vintage keys from the bronze, silver, and golden ages, don't get traded hourly like stocks. Most of them don't even get traded daily. Sometimes it is weeks before another copy of one blue chip issue sells. Because of this, it is normal for any one key comic in any one grade to fluctuate with a decently large standard deviation from sale to sale. For example, if you look at the sales of an AF-15 CGC 2.5 over the last 14 months, the sales of that book went something like this. And this isn't exact, but I've been looking at these numbers and it's pretty similar. 25K, 30K, 28K, 37K, 34K, 39K, 32K. So, for example, when the 32K book sold after the 39K book sold, that could be seen as an 18% drop. So does that mean that the market for this blue chip key crashed? Absolutely not. This is why you use rolling averages. The reason for the large standard deviation is because the book is so scarce on the market that it could take just a couple of people bidding at one time to want the book more in that moment. If you took the average fair market value for this book, it lands around a 32K average, and that is how you gauge fair market value. Essentially, the book stayed healthy over the last 18 months. It wasn't like it was on this upward trend, 25, 27, 28, 30, 32, 37, 39, and then it boom, back down to 32 or 30K. Moving on. So, sure, go ahead and compile whatever index you want. The bottom line is that comics are still different than stocks, and the market is measured differently. Also, many comics are still seeing record increases currently, which means money is still being shifted around the market. So, I go back to my original statement that the comic market as a whole has never crashed. Ebb and flow is healthy. If a market or an index or a stock slash comic never ebbs, it is those investments that end up proving to be more volatile. Am I concerned with the future of the economy and the intrinsic forces that might take more money out of collectibles? Yes, I am. I am. But that holds no weight on the facts of the current market or a market precedent. So the individual replies to saying, I appreciate your long thought out answer, but I'm going to go ahead and decline to discuss this with you further on the basis of your reply. Best of luck. So I'm reading into this comment. I'm saying, okay, are you saying this cynically? Or are you saying it because, and one thing that I always like to say is this, especially folks on social media, when folks turn to cynicism or narcissism or online bullying or just being a-holes, it's because you have no argument, right? And I want to ask this individual, and it's not about winning here, folks, because sometimes truth to any debate or conversation, there's truth on both sides, and you can bring perspective from both sides and learn something from both sides of the argument or the conversation, right? So it's not like, oh, well, I won, but it's like, well, okay, so are you, and you guys know me, I'm confident. It's not ego or cockiness. I'm confident in going into my arguments and into these debates saying, I know my facts and I'm going to argue the facts before I get into an argument because I'm not going to go into it naive or uneducated. I'm going into it like a lawyer and I know what I'm talking about. So let's have at it. So I reply here and say, okay, look, thank you for taking the time to read and acknowledge. I'm going to assume that you understand the facts of the matter in a broader light now. I'm absolutely open to hearing a respectful counter if you have one. So I'm saying right there, like, don't just cop out. Like, maybe you're saying, okay, you're right, that all this works, but still, I mean, you made a very strong argument against me, first and foremost. Like, let's hear it. Give me the data. Like, prove me wrong. I'm absolutely open to hearing a respectful counter if you have one. For me, argumentation should be a good thing because it allows different viewpoints to maybe find middle ground. Too often, people jump to social media with cynicism and thinking that any debate is one that needs to be toxic. This is not me. So as long as there is no cynicism or toxicity, I'm willing to hear what you have to say. So the individual actually replies and comes back. And this is where it started growing fruit. The fruits of our labor here, right? They say, I'll just say this. I'm a well-educated investor in things that aren't comic books. I do have some expertise here, and I'll acknowledge that. I'm not going to shoot him down for that, and I say that in my reply, but let's go ahead and see what he says. I think the core problem is you are calling something an ebb and flow that to me is clearly not that. It's bigger than a correction, which is generally a 10% drop. So now he's saying a correction is a 10% drop, which before he was saying a crash is a 10% drop. So, poking some holes here. But let's go on. A crash is loosely speaking something bigger. I'm positive the average transaction book is down more than 20%. Okay, he provides no example though, but continues on to say, you're talking about standard deviation and volatility as if it was totally explained by scarcity here, which I don't agree with. I wasn't totally doing that, but let's go on. Which I don't agree with, but would take a lot of math and data I don't have the time to collect to prove. Basically, we agree the price has moved a lot, but don't agree on the magnitude or the language. I know how to prove one of us right and one of us wrong, but I don't have the interest in collecting all the data to do so. Maybe if I could buy GPA's data, it would be much easier to prove one of us right. I think we have fundamental differences in the way we're interpreting the data, if not a flat out miss on what data we're talking about. And I don't have the data to easily prove you wrong on a large scale. However, making positive claims like you have requires a lot more data than you have provided. So bottom line, I can't prove I'm right, neither can you. So I'll leave it up to the individual how one interprets the data that is everywhere, even on sensationalized YouTube channels, as you put it. So I think this individual came out and absolutely said, look, I have nothing to back up my statement. And he clearly says, I have nothing to back up my statement. I'm pretty sure, or, I'm this one thing that I do agree with him there is like the language and how we understand the language. Okay, language in many things can be subjective or not so concrete, but still, this individual didn't provide anything. And then he goes and says, well, you only provided a small portion of examples. Well, I provided some example, you provided none. I'm pretty sure that the market's dropping 20% across the board. Okay, give me even one example of that, one or two examples of that. Nothing. But I at least appreciate his willingness to engage respectfully in the conversation. This is how I reply. I appreciate this comment very much, as I think it is productive in nature, but let me add some context. And here I go with the data and the facts presented as an argument. You probably understand stock investing more than I do. I give him credit for that. Even though I hold 2 business degrees, I'm definitely not a big investor or a scholar of the stock market. But I think you should humbly take heed to the fact that you cannot use the same language to dictate and label the comic market. Also, if you are this educated, you have to own up to the fact that you cannot generalize crash to the footnote definition of it. As for the data, I am a content creator myself. I sell comics, and I'm a comic book market journalist. I literally look at the data every single day, literally, even on weekends. I use GPA and other sources for real sales data, and even compile data myself to run even more intricate analyses. Volatility and scarcity in the standard deviations I speak of absolutely correlate for comics much differently than they correlate to stocks. Stocks move up and down literally every single minute. Anytime one single share is traded, it moves the price of that stock left or right. It takes much more to move a stock left or right. Take any premier stock, and I'm sure hundreds, if not thousands, of those shares are being sold and bought every single day. Comics don't do that. So when a stock dips 10% in a matter of a few days, it proves its extreme volatility, because it takes a lot more to move the needle of a stock than it does a comic book. With the comic that sold 3 comics in 1 week, and each sold for $85, $100, and then $90, you cannot say that that book dropped 10 or 15% and claim it's crashing. A standard deviation of 20%, especially on high-valued comic books in the thousands, is not volatile, according to precedent of blue chip keys on the market. It's actually quite normal. Even during the COVID peak, blue chip key sales, while maybe overall trending upward over, say, a 3 to 6 month period, would still see sales lower than the previous, up to 20%, to then see another sale after that set a new high. So what am I saying here? What is standard deviation? Standard deviation is basically a tool you measure to gauge outliers on a market and to gauge volatility, and to gauge, correlation, like say in a regression analysis. So if you're measuring volatility, or is a stock crashing, you can measure it by a certain amount of standard deviations, right? How much does one sale to the next deviate from the mean or from the average? So the same goes with comic books. And that's why I say you have to use rolling averages and then look at the standard deviation from that average. Like, are they deviating more than 10%, more than 20%? And you can really look at the fact if a comic book in a certain grade on the market at any, say a few week period, if it deviates up to 20% left or right, and those deviations move left or right, they're not just moving in one direction, right? So mainly one sells for 30,000, another sells for 20,000, or 25,000, and the next sells for 35,000. And then the next sells for 29,000, right? They're not deviating that far from the average. And they're not also trending downward. One is selling for less than the median or the mean, and then the next is selling for higher than the mean. There is no crash going on here. It just shows a flux of what these books are doing on the market because of the scarcity. Because they're not moving hundreds or thousands of units a day, whereas a stock, if it's moving thousands of units a day, so if a stock market is moving 10 to 20%, it's going to be more volatile because the standard deviation for a stock, because there's so many of them flooding on the market, selling on the market, trading on the market at any given time, that standard deviation in correlation of volatility is going to be much, much smaller. So I hope that helps you guys understand why I'm using standard deviation to look at volatility. All right, but let's continue on here. I go on to say also, it's hard to claim a market is crashing simply when a few indexes might be trending down. I'm literally compiling a list of X-Men keys right now, mostly silver and bronze age, where I look at the current data and compare it to the last 2 years. While some of the books have recent sales that are trending downward, maybe up to 20%, half of them so far have recorded record high sales over the last few months. Again, this is fact. I'm not just making this stuff up. I can only hope that you trust my word. I'm passionate about argumentation. I should have been a lawyer because I love studying debate and business law. I don't jump into debates without having my facts ready. I present everything as if I'm a lawyer in a courtroom needing to win a murder case. I'm not naive to what could definitely be coming if the economy doesn't work itself out. But knowing the facts in the data that I know from studying the market every single day of my life, there is no way we can currently say that the market is crashing yet. I think we can accurately start talking about a crash if blue chip keys and big dollar keys dip closer to spring 2020 values. And then I provide an example, and this is what I'm working on. You guys are going to get a little taste to an upcoming video. Here's an example. The record high sold of this book, it's an X-Men key. We're going to bring this up right here. This is Uncanny X-Men number 10. First appearance of Kazar in the Savage Lands. And you can see that I have a record high back in March of 2640, but the last sale was 1920 in June. So, oh my gosh, is that crashing? But there's context here. And I state, you might look at the most recent sale to the record high and say, well, look, the book is crashing. It's down 27% from the current sale to the record high back in February. But that's not how you look at comics as a stock. First, the record high was an outlier. So take the most recent sale and compare it to the current rolling average. It's much closer to it, and it is only down from that average 9%. Also, keep in mind that that average does include the outlier sale that moved the average higher. Eliminate that outlier sale from the average, the current sale is down even less. The current sale actually reflects a very similar fair market value comparative to the last 6 months of sales. All of the content that I noted here matters to understand the comic book market and how comics differentiate themselves from stocks. If the rolling average was 2,600 and the last 3 or more sales were under 2,000, then that would be indicative of more of a market downturn where we could look at it and be very much concerned with what the book is doing on the market. So the original poster comes in here. It says, this is the discussion I was looking for. Thank you for being civil. Look kind of ugly at first, but right. He says, personally, I think the definition of crash is subjective, and that's likely what your odds about. There is subjectivity to it, folks, but I'm going to tell you, it's not as subjective as anyone is making it to be here. If you actually study finance and understand markets, you'll understand that crash is much more complex. So there is subjectivity, but it's not as loose as, like, should I dare say, first appearances? Anyway, moving on. If you're the type of to speculate on modern books, particularly variants or flavor of the month books, you're likely already felt the crash. I don't think many of these books will recover. If you're the type to invest in Bronze Age or earlier, you're probably going to be fine unless you need to sell everything immediately, in which case you might take a hit. All that being said, that is, you'll take a hit if you bottom over the last 6 to 12 months, maybe. All that being said, the bluest and blue chip books are still hitting record highs, some of them, and that bodes well for the hobby. I reply stating this: great perspective for sure. If we want to get technical, spec books crash all the time, but it's not indicative of the market. This is why I have a really hard time when people sensationalize or overuse the term crash. I also think you have to consider recent increases and how they measure the current decreases before using the term crash. And that goes for stocks and comics both. If a stock doubled in the matter of 2 months, but then drops 20% over the next couple of weeks, did that stock crash? In my opinion, no, because it's still up 80% from, say, like 6 weeks ago. Two words here that I love to repeat: context matters. Bear markets don't automatically equate to crashes. I'll use the example of a forest fire. Sometimes a forest fire will burn down tall trees, but it also cleans the dead brush, which actually helps new vegetation to grow, which actually nourishes the forest for new growth. Bear markets can do this as well. A buyer's market in a bear market can be a forest burn, so to say, that eventually can turn the market into a stronger bull market in return. This is the guy that was originally responding to me, says, we can agree on what you said in this last statement for sure. I don't think any of this last statement is wrong. It's just a matter of looking at data more holistically that we're missing, in my opinion. And then continues on to say, I will say this: I just think we need a lot more data and analysis than we have here to make a definitive statement. I remain sure enough that we have at least experienced what we would call a correction or worse in the overall market, but am open to being wrong if presented with the right data. Well, again, respect to this guy for being humbly engaging here, but I provided, even though I do agree that I'm only providing sample sizes, I am, but I provided multiple examples of multiple different cases. And while he has not provided any data at all, so let that just be stated for record. But I do reply and say I agree about correction. And this is probably the healthiest correction in comic book history. Simply because when we were shut down, no one was going on vacation. No one was going to the theaters. No one was eating out or even putting money on gas. Outside of people getting stimulus checks, people simply had excess income, many of them having excess income in the thousands each month. The market exploded so much with so much excess spending, and this was one of the main contributors to the increases on the market, right? So to see key comics increase by exponential amounts, literally some books increased 200% to 400%, some of them even increased even more than that. I've done videos on them over the last year. For them now to just drop 20 to 30% is not indicative of a crash. But when adding when we add the proper context, right? Even if the economy stayed healthy, values would have still cooled off naturally because demand would have slowed down organically with the world going back to normal. Another thing to note is that this comic market was trending upward before COVID, which is an indicator that the market will continue to move forward after this correction. So, wow, there it is, folks. That was a lot to take in. I do think this was a very productive conversation. We talked about the current state of the market. We talked about, something I've recently talked about too. Oh my God, the comic market is crashing. No, it is not. At least at this point, I feel that this is a healthy correction. I am worried about the economy, though. We shall see. Those are extrinsic factors, though. But while there are so many factors that align comic books as investments to the stock market, I hope I showed you that there are still many differences, many extreme differences in how we look at both the comic market and the stock market, and have to gauge them differently in in a respectful nature to their own industry and to their own market. So guys, I really want to hear what you guys think in the comments below of what you took from this back and forth today. Please, if you aren't subscribed to the channel, again, I'm here making content almost every single day. Please take the time to do so. And again, guys, stay tuned for the 60-second popculturezone.com drop that we're about to roll. And don't forget to check them out and their link in the comments below. Thank you guys for watching. Be well, and until next time. Popculturezone.com is an online shop focusing on hot new comics, including exclusive and incentive variants, CGC graded comics, and tons of other inventory, including pop culture toys and other collectibles, all at low and competitive prices. PopCultureZone.com ships all over the US. And if you are buying raw comics, they offer flat rate shipping of only $4.99. That's right, $4.99. Absolute craziness, right? And there's no taxes included, excluding New Jersey. Pop Culture Zone is also on eBay, where they hold a 100% positive feedback rating with over 8,000 completed transactions for this year alone. Make sure to check out the link to their website below, as well as their eBay link, so be sure to give them a follow there as well.